What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Nvidia stock, ticker symbol NVDA, on a variety of time frames in anticipation of the next trading day, Monday, May 20th. All right, guys, Nvidia stock back on Friday closed down $18.80 a share. It's minus 1.99% in regular trading hours. Listen, it's up a little bit in the after hours, just about another dollar or so. Take it with a grain of salt. After hours volume is going to be extraordinarily low, so take it with a grain of salt either way. But let's take a look at this thing as we head into tomorrow, now Monday, and try to really get prepped. Looking at really everything that the stock was willing to give us on Friday, heading into tomorrow so we can really get ready. We'll look at the volume profile, pull out directional bias there. We'll look at the psychological levels. Big money's watching, so we need to be as well. Implied volatility, particularly important if you're trading options on this stock. We'll look at the expected move for tomorrow. And finally, the directional bias for tomorrow coming out of the chain. So let's get started with that volume profile analysis on the 5-minute chart, kind of taking a look under the hood to pull out any bullish or bearish bias underneath kind of like the waves of the actual price movement. You know, this bias isn't so obvious. You have to kind of dig for it, which is what we're going to do here to start. Guys, by the way, if you're new here or you haven't done so already, please subscribe to the channel. I cover Nvidia every single day. Of course, with earnings coming up this Wednesday, that's not going to be an exception. I'll be covering it each day, getting ready for the next trading day. My goal here is 10,000, so I appreciate you subscribing, and I'll keep these videos coming daily. Now, looking under the hood, we had kind of this, at least during the intraday session on Friday, kind of a fade with a couple of pops throughout the day. But if you were to draw like some kind of line or a trend line, I suppose, it'd be kind of a fade throughout the majority of the day. But what I'm really interested in are going to be those more aggressive fading periods and then the upside kind of like bullish returns over the course of about a half hour. Because those are going to be the highest volume, and it's going to tell us the most information if there's anything that we can pull out. So very normal open, volume fades off quickly. What we then see is the bullish and bearish candles that kind of exceed normal contextual volume. They kind of cancel each other out here in the morning, which I think is really interesting because, I mean, it's never going to be perfect on the volume profile. It's never going to be like a full, okay, 1,000 points cancels out 1,000 points. It's going to be more like, okay, to the bearish side here, maybe we give them on a scale of 0 to 1,000 in terms of bias. Maybe we give the bears like 200 and the bulls get 175. To me, that's cancellation. Okay, it's not enough. It's too dangerous to go around assigning all this bias anytime there's a point difference. Of course, I'm speaking theoretically. It has to be obvious. Okay, it's too much up for interpretation, and there's too many little things that we could spend an hour here just being nitpicky without getting anything done. So moving on from that, this all cancels each other out in my eyes. Get a little pop here, too much risk of fooled by randomness. Move on. Once we get to this point of the day, this here, guys, if we had 5 consecutive red bars without the gaps, all at that volume, that would be extraordinarily obvious bearish bias, but it's not. We get a pop, big fade in green, pop, big fade in green, and then a pop. The fact that we're seeing the differences in volume from the red to green, green fades quickly, return to red, back to over 500,000 shares, then green fades quickly. That being the case, guys, this small area here, that is a very small amount of bearish bias, but it gets broken up and that starts to deteriorate because you get these gaps. All right, it's not consecutive, it's very pop, drop kind of mentality. But it's clear because you see the volume differences in green versus red in that area. Here, to me, maybe not enough to go assigning any bias. And then realistically, guys, into the close is quite normal, actually. A lot of you guys are probably looking at this big red bar, like what is going on there. That's a rebalancing bar. That's the first bar after the closing bell. That's when all the algorithms trigger for funds and institutions to rebalance. A lot of buying and selling going on in the same bar, just making the portfolio look the way they wanted to for either client reporting or just the next day in general. And you can see here that not a lot of movement, net movement occurs on that candle just because it is a battle bar, a rebalancing bar. So I tend to ignore that one. So realistically, guys, all we're seeing here is a tiny amount of bearish bias. It's really not much at all. And that, again, came from this region here. And the truth is, it's nearly a 2% red day from Friday. Bears, it's a little disappointing. I mean, let's be honest. You guys are kind of looking for like pretty clear bearish bias to support the red move. Whereas bulls, you can't go and expect massive bullish bias. It's a 2% red day, right? So what are you really looking for? You're looking for anything but obvious bearish bias. It's kind of what you got. You got a very slight amount of bearish bias, which, you know, as a bull, the movement already happened. It's already down 2%. So I'll take what I can get from a bullish perspective. But bears, little disappointing, but the reality is still down 2% on the day, so fine. Now listen, let's move on. Let's take a look at the psychological self-fulfilling prophecy levels. This is going to be a little bit more simple, okay? On the 30-minute, and then we'll look at the 4-hour and the daily. The most heavily watched time frames with the most obvious indicators, because all I care about is the psychology around the indicators. I don't care about the indicators themselves, which is why I use the most popular. That gray line's the 200 period, and the white line is the 50 period. Okay, so now you can see here on Friday. From Thursday, it was kind of up in the air. Friday morning, we tested the 50 off the open, rejected hard, came down, held the 200 as support. Okay, bears, not a bad thing to see from Friday. But heading into tomorrow now, Monday. Okay, what are we really looking at here? Well, the stock is approximately 2/3 of 1% away from a downside test of the 200 period, and about 1.25% away from an upside test of the 50 period. They're both well within a single day's potential move on Nvidia. So here's what we're really looking for. Bulls, any test of the 200, you're going to want to see that hold hard as support, ideally bouncing away on high volume. Okay, but the goal really, if you're a bull come Monday, tomorrow, is to break up through the 50 period on high volume, retest it on much lower volume, small sample size, betting on the breakback downside, and then boom, hold, bounce away, treat it as support on a higher volume as the volume pours back in, right? Big sample size. And in doing so, you have now reclaimed the 50 period as short-term support. Okay, bears, any upside test of the 50 period, you want to hold that as resistance, right? Reject hard and as quickly as possible on as much volume as possible. Bears, the goal, high volume downside break through the 200, low volume retest, high volume rejection, claiming that as short-term resistance. Let's move on to the 4-hour chart. Now you can see here on the 4-hour, Nvidia is currently somewhere around 1.25, 1.3% away from that 50 period moving average here on the 4-hour chart. So it's quite in play actually. All I'm really watching here, bulls, if we test it, I want to see the 50 hold as support ideally. If it breaks, the next area on the 4-hour is the 200 period, which is currently at 881.50. So not ideal, right? Hold the 50 as support ideally upon any retest. Whether we retest it or not, bulls seeing that 50 period continue upside in an ascending position, claiming as many whole dollars, like maybe 920 as possible, that would be great. Because having more psychological potential barriers back to the downside as high as possible is good if you're a bull, as long as the stock is still above the level. And bears, really the goal here tomorrow is to get beneath the 50 period. Treat it as resistance, right? High volume downside break, low volume retest, high volume rejection. Break and claim it as resistance. What does that do? That sets you bears up for a near-term test of, let's be honest, $900 is the next level. It's not, because on the 4-hour, the next level is 881.50, the 200 period, but realistically 9 is a highly important level, which brings us to the daily, because that's really a daily level. So if we're looking now at the daily, it's like, what's really the story here? Okay, because the stock is approximately, we look here, it's something like 2.5% to the downside away from $900 a share, and it's going to be similar, about 2.8% away from $950 a share. That's a little bit of a wide channel, but the story is what it is. And let's be real, if you're a bull, the story is this. Any test of $900, hold it. Ideally, break above and hold 950, because that's proving to be a level now. But realistically, guys, from 950 to 1,000, the only level is the previous all-time high. And I'm more concerned with $1,000, because Everyone else is going to be watching 1,000. A new all-time high is like, okay, great, what's next? Boom, $1,000 a share is staring you in the face. That is the most obvious level, probably in history, on Nvidia, right? That's clearly a story if you're a bull. Now, if you're a bear, it's simple. Hold 950 on resistance upon any test. As resistance upon any test. Ideally, the goal, break down below 9, set yourselves up for a downside test of the 50-day, because really the near-term goal is to break downside below the 50-day moving average. Really simple here if you're a bear. That's the story on Nvidia here tomorrow on the daily. Now, implied volatility, crucial if you're trading options. Compared to the last 3 months, it's in the mid to high range. Okay, compared to the last month and a half, it's in the high range. So understand that you need to compare IV to your intended trade time frame. When I say that, I don't necessarily mean like the expiration you're buying. I mean the amount of time you intend to hold said contracts. Because unless you plan on exercising these, what really matters? What matters is the day you buy and the day you sell, right? So your intended trade time frame, whenever I say that, is the amount of time you intend to probably hold these, with a few variations of what you might decide to do differently as time goes on. And the context of where IV is can change depending on how long your intended trade time frame is. That's why I'm giving you the 3 months and the 1 month. Notice how they're different a little bit. So understand that, especially compared to the last month and a half, IV is higher, which means that you are paying in that intended trade time frame some elevated Vega value in those contracts. Vega being, how an options contract, it's the Greek, that how an options contract prices in implied volatility. So when IV is higher, you're paying a little added Vega value that increases the potential risk of IV crush. So if you're cool with that, if that's like part of your deal, you're like, well, I'm paying up for that because I think this is going to occur, that's fine. But just understand what you're buying. Okay, now for those of you looking to sell options, if your intended trade time frame is like a month and a half, might not be the worst time to think about doing that because the Vega value is a little bit higher, though understand that in the last 3 months, IV has been quite a bit higher than where it currently is right now. Now, expected move. All right, let's take a look. This is going to get kind of sloppy. We have earnings on Wednesday, and the next expiration we have is Friday, May 24th. The expected move by Friday's close compared to this last Friday's close is plus or minus $89 and let's say 6 cents per share. Okay. Now that puts the stock in quite the volatility range, right? I mean, we're looking at either like 835-ish or over 1,010. Right, that's the plus or minus volatility expectation. That's the plus or minus nature of expected move. That by design, there's no directional bias baked into that. It's the one standard deviation volatility expectation in that particular time frame. But so that's the market's pricing in some volatility, right? But there's a problem. Looking at tomorrow, Monday, we know that quite a bit of that volatility is going to be from earnings, probably most of it. All right, now if we look at the week that follows, you look from May 24th to May 31st, that's after earnings. The entire week has like $10.45 baked in. Okay, that's a lot less than the 89 that we're looking at for the same time frame here from now to the 24th. Okay, but it's also important to understand that from the 24th to the 31st, they're pricing in a little over $10 plus or minus. I mean the traders. That tends to increase as time comes closer, and it tends to be lower the further out you go. So if we were to do like that $10 and 45-ish cents divided by 5 trading days and add back our normal 50%, okay, that's bizarre. That gives us a plus or minus potential move of like $3.14 a share. That's very low volatility for Nvidia. So that doesn't make sense to do it that way for tomorrow, Monday. So really, if we're looking at $89 of movement being priced in by the market between now and Friday's close, honestly, I think we can expect probably The most volatile days in that calculation are going to be Wednesday, because that's the day leading up to earnings, right? The earnings are after hours Wednesday. Thursday, the first trading day after earnings, because earnings hit in the after hours. And then Friday, kind of that second day continuation of kind of like roll-off volatility. So what's interesting is, if we think about this logically, and this, I know that this is sloppy, guys. This is so sloppy. We have to do this, and because there's nothing else we can do. There's only weekly expirations on Nvidia. We don't have daily. So to get the data, we have to do some educated guesswork. If we look at this with a brain, and we think about this logically, the least volatile days being priced in are probably Monday, then Tuesday. Okay? If not Monday, then Friday. I would say probably Monday, then Tuesday, and then Wednesday volatility really picks up because it's the day of earnings. Thursday, of course, volatility is likely to be very high. Friday, you're likely to see some dying down, but still some kind of like second day of the event volatility. But realistically, you know, the Tuesday or Friday argument, which one's bound to be more volatile, doesn't matter right now because we're talking about tomorrow, Monday. And I think realistically, Monday out of this options chain is probably being calculated in as probably the least volatile day. And if we do the basic calculation that we would do on any other normal week, we take 89.06, divide that by 5 trading days, and add back 50% to make up for the fact that the initial calculation assumes all green days or all red days, which is a silly assumption. That gives us an expected move for tomorrow of plus or minus $26.72 per share. But that doesn't make any sense. That's going to be artificially high because we know that a lot of that volatility being priced in is especially from Wednesday and Thursday. So it sounds bizarre, but to me, it seems like the volatility being priced in for Monday is a range of maybe plus or minus $5 to $20 a share, which is a wide range. I agree with you, but either way, the reality of that expected move is it's not all that high for tomorrow. And again, this is very sloppy. That is literally the best we can do in this situation in terms of volatility expectation. But either way, even though it's a very wide kind of weird range, and it's going to get better as the week goes on, as we continue to cover this, as we get more information from the market, and things are less open-ended, right? But I think the biggest takeaway here is that the market is not pricing in a lot of volatility for tomorrow, based on that week-long total expected move for the whole week. Okay, so understand that the market's expectation for volatility starts the week likely lower and then picks up as we head into earnings and then fades off the back end of Friday. So it kind of looks like maybe like a skewed like bell curve in terms of expected volatility. And if you're sitting here like, well, and by the way, we're going to look at directional bias here in a second. But if you're sitting here and you're like, well, why do we care about expected volatility? Well, if you're trading options, having a directional bias is nowhere near good enough. You're competing against people who take directional bias as well as volatility bias very seriously. And volatility bias, Vega, right, which is why we look at all this stuff, is a huge piece of that puzzle. The way to trade options effectively is to have a strong directional bias and then also have a strong volatility bias. And then however you disagree with the market, especially in terms of volatility bias, you take your directional positioning with the beneficial positioning that benefits your volatility perspective based on the markets. What I mean by that is, let's say you have a very bullish bias and you think volatility is going to be much higher than what the market is pricing in, then it's easy. Then you can look to buy calls. Okay. And also on the back end, you have to have a way of dealing with theta decay. If your assumption is you can outrun that easily, fine. The further you go out in expiration, the easier it gets to deal with theta decay. But listen, for example, if you're like, well, I'm super bearish, but I think volatility is going to actually be lower than what the market's pricing in, well, then you could look to utilize an option spread that takes that position, or you could just sell calls, sell to open some calls. Okay, so listen, volatility bias is a huge part of being profitable, especially mid to long term trading options. Just directional bias is nowhere near good enough, not even close. Now let's take a look here at the directional bias from the volume from Friday. Okay, we had 1.64 million total contracts traded, 955,000 calls, 686,000 puts. So we're seeing a call side bias heading into this week. Now, if we break that down by time frame, right, the 0 to 20 delta range, the short-term speculators, we get 412,000 calls, 320,000 puts. So call side bias out of the short-term speculators as well. It's not tremendous, but it's there. Listen, guys, at that link in the pinned comment, that's where I'm hanging out with the group every day. First of all, over 3 years ago, my reasoning for starting the private community was because as a trader, I've learned every mistake in the book, most of them multiple times. It was a very painful process. So I originally started that to try to help people learn from my mistakes and maybe help some people try to expedite this process. So each day I'm sending out my scalp setup alerts, my in-play stock alerts, human verified by me, unusual options activity, and then of course I'm working with my Platinum one-on-one group. That link in the pinned comment, that lets you get grandfathered in at the current rate. The price will be going up soon. We're going to be changing the way that the payment is structured in the future here. And that's currently going on behind the scenes, but it's not quite ready yet. So truthfully though, that link, it is one of the last opportunities to get grandfathered in at the actual current rate. That's still open as of right now. And by the way, for those of you that join and are current members as well, once that changes, all your stuff will stay the exact same. It'll only be changing for people who join like later, like new members. So, but again, right now it's all the same. So take a look at that link in the pinned comment, and I'll see you guys inside. If you're getting value out of the daily Nvidia uploads, please, the best thing you can do for the channel is quick, takes half a second, and it's free. Leave a like on the video, helps out tremendously. I appreciate it, and I'll see you in the next one.